When a startup reaches the due diligence phase, it's time for investors to dig into the business fundamentals. As a VC, you need access to verified information on the company's financials, legal standing, cap structure, product, team, and market traction. This is where the data room comes in, and you should always request one. A data room is a centralized, secure repository of key company documents. It ensures that due diligence is done efficiently, with transparency and professionalism. A well-structured data room accelerates the investment process, builds trust, and prevents endless back and forth. Conversely, a messy, incomplete, or ad hoc data room raises red flags. If the company doesn't provide a data room or it's not organized properly, you should send them a structure or checklist of exactly what you expect to see. A data room is a secure online folder system where all essential company documents are uploaded for investor review. It's the single source of truth during due diligence. At the early stage, this might be hosted on Google Drive, Dropbox, or Notion. For more advanced rounds, platforms like DocSend, FirmRoom, or Carta become more common. From a VC perspective, the data room should be requested as soon as a deal moves into serious discussion, and it should be reviewed thoroughly and systematically. You're looking to validate the startup's claims and uncover any risks before writing a check. If the data room is incomplete, outdated, or unclear, you should provide the startup with your own preferred structure, typically a folder outline or checklist of documents to upload, to move things forward efficiently. A well-organized data room is essential for streamlining the due diligence process and making it easy for venture capital firms to access key information about a potential investment. Ensuring that the data room is structured clearly and updated regularly helps facilitate a smoother review process. Despite some common essential sections that must be present in every data room, it is essential to recall that the structure of the data room depends on the stage of the startup, with some information that can be more or less important or even absent for very early stage startups. In any case, here's a general breakdown of how it should be organized. The first section should cover the company overview and strategy. This is where the pitch deck, the final version presented, along with the business plan or strategic roadmap, should be located. This section should also include the company's mission, vision, and key milestones achieved. The next essential section is the corporate and legal documents section. This should contain the articles of incorporation and bylaws, the cap table outlining ownership structure and equity breakdown, and a list of existing investors and past funding rounds. Board meeting minutes, governance documents, and founders' agreements or employment contracts should also be included. Also, the financial documents section is critical. This should contain historical financial statements, profit and loss, balance sheet, cash flow, tax filings, compliance records, and financial projections, typically a 3 to 5 year forecast. Budgeting and expense reports should also be included. For tech-driven companies, a product and technology section is necessary. This should feature the product roadmap and any development updates. If there are patents, trademarks, or other intellectual property filings, they should be stored here. Investors will also need to review technical documentation, security policies, and compliance certifications if applicable. As a VC, you should also ensure that the customer and market data section is included. Key sales and revenue metrics such as MRR, ARR, churn rate, and customer lifetime value should be provided. Additionally, customer contracts or agreements, retention data, and any market research, competitive analysis, or industry reports should be included. Then, the team and HR section should outline the employee stock option plan, the ESOP, an organizational chart, and plans for key hires. It should also include employee agreements and details on compensation structures. Additionally, always ask for a legal risks and compliance section that covers any pending litigation or legal disputes. Regulatory compliance and industry-specific permits should be included, along with data privacy policies such as GDPR or CCPA if relevant. Finally, the fundraising-specific documents section should contain any proposed term sheets, safe or convertible notes, and previous investor updates or progress reports. By structuring the data room in this way, investors can efficiently access the key documents needed for due diligence, ensuring a transparent and well-organized review process. This setup facilitates informed decision-making and builds trust between investors and the company. To ensure a smooth due diligence process, venture capital firms should follow a set of best practices when reviewing and managing a data room. These practices can positively impact the quality and speed of the investment decision. First, it is essential to always request a data room. If the startup hasn't provided one, don't wait. Ask for it as soon as you begin serious diligence. If it's disorganized or incomplete, send your own folder structure or checklist to guide them. Early-stage founders may not know what's standard. Help them get there. Also, review for signals, not just content. The organization and responsiveness of the data room tell you a lot about how the startup operates. Delayed uploads, messy folders, or missing financials may signal weak internal processes or worse, undisclosed issues. Finally, maintain security and track access. Use platforms that let you monitor document opens, downloads, and engagement. This gives you insight into how transparent and responsive the founders are, and it also protects you if multiple partners or co-investors need access. A clean and well-organized data room does more than support the due diligence process. It also signals that the company is well-managed and ready for investment, both of which are essential to closing a successful venture capital deal. A well-managed data room is essential for venture capital due diligence, ensuring that investors can efficiently review a startup's financials, legal structure, customer traction, and operational health. Transparency, security, and organization signals strong operational discipline, while tracking investor engagement helps founders navigate negotiations strategically. By setting up a professional data room, startups can instill confidence in investors and increase their chances of closing a successful funding round.